JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 19th of October 2020. So yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, just wanted to kind of show you what's happening here globally in terms of the coronavirus. Now, of course, last week, we did have a bit of a spike and an all-time high in terms of daily cases. So hopefully, I mean, don't get me wrong, this might rise again but yeah, hopefully this is going to be going down soon, because I mean, of course, everybody's really looking forward to some vaccines getting developed, I mean, getting produced. So hopefully that can come in as early as possible, because the market is, of course, feeling the heat on that. But if we look at this morning, we'll see that some of the Asian markets did recover somewhat on hopes that the vaccine might be ready before the end of this year. So again, looking at this picture, you can see that yes, we are already kind of hitting 40 million across the globe in terms of total confirmed cases. But of course, the thing that we're keeping an eye on here are the daily cases. So as we know, last week, yep, we had a bit of a spike. So also, before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. Feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, jumping into the charts. Now, the first one I want to pick up here is on Nikkei 225. Now, this is what I was talking about, that a bit of hopes in terms of the coronavirus vaccine getting developed, getting produced before the new year. Again, all this is still speculation, and the market, that's what the market is currently reacting on. And basically, the only suggestion here, guys, for you is to keep an eye on those news, on those headlines, because that's what's driving the market at the moment. Yes, a bit of data, yes, that kicks in, but mainly everything surrounds the coronavirus. And of course, indices are waiting for the Trump Biden kind of final clash here, and who will be the president, and at the beginning of November. So yeah, we'll keep an eye on that as well. But for now, at this point in time, you can see that yes, the index here, Nikkei, continues to trade within this rising wedge pattern. Now, last week I've mentioned this idea that in a way the index could stay here within this pattern for a while, and of course, as we know, according to all the TA rules, these patterns tend to break to the downside. So that's why excuse me, that's why, yes, we are having a nice push higher within the pattern, and we'll continue targeting the upside within the pattern, but we'll be very careful right now near this upper side of this rising wedge, because if we get a nice push above this, the current highest point of October, near the 23,725 territory, then yes, we'll aim for some upside, but further upside, because this would confirm a forthcoming higher high. But we'll be very careful near the upper bound of this potential pattern here. If that gets broken, that's wonderful for the bulls. We could see a further push north, but if it doesn't, or let's say even if we see a false breakout where the daily candle would still eventually end up being below the upper side, then yep, this could raise a bit of concerns here. So that's why for now, guys, yes, the positive on the positive note is that yes, we are still trying to climb higher here. We're keeping an eye on this 23,725 zone. If that gets broken, then yes, this could open the door towards higher levels. But if it doesn't, or let's say if it gets a hold up near the upper bound of the rising wedge, then be careful, because we could see a nice reversal back down. Now, talking about a reversal here, it's not really a reversal, but this is what I talked about last week. Basically, the Shanghai Composite, last week I've mentioned this idea of a possible bullish flag here, and which I would say partially worked out. So the index drifted higher. It ended up breaking this level, this 3,361 territory that I talked about last week, and today you can see that happened today, of course, and you can see that it quickly reversed back down. Now, probably the reason why it reversed back down was mainly on not very good China data. Their GDP figures came out on the lower side, so that's a bit of a disappointment here for the market. Of course, the industrial production year-on-year figure came out much stronger than the forecasted. So the forecasted was at 5.8%. The actual came out at 6.9, so which is a good result. So maybe that's why the index is not really drifting heavily to the downside, and of course also kind of getting supported still by the Chinese unemployment number. So basically, long story short, here what we're seeing from the technical side, you can see that yes, it drifted back down, but it got a hold up near this 21-day EMA. So if it continues to kind of balance above this 21-day EMA, then well, I mean, we could see another push higher here, another move north, and yep, for now, let's keep it. Let's be careful here. If you want to aim for some lower levels, then wait for at least for a drop below the 3,280 zone, somewhere around here, and then we could consider maybe a move towards this lower bound of the range where the index is currently trading in. In terms of the upside, another push above this 3,361 territory would be needed in order to get a little bit more excited with the upside. Now, jumping into German DAX here, so the index did have a nice close here on Friday, but as you can see, it kind of still remained in the red for the week. Now, if we look at the cash index and where it's currently balancing at, we can see that the price is sitting just not far from that psychological 13,000 level. So basically, it's currently sitting at around 12,950-40 area, so somewhere around here and near the Friday's high. On the positive side is that the fact that it's currently sitting above this 21-day EMA shown as the yellow line, so that's great news. But as I've mentioned to you guys last week, at least a push back above the above that psychological 13,000 zone would be needed in order to maybe get or to, I would say, to start examining the upside, because still the more comfortable level for us is this barrier, the current highest point of October near the 13,152 mark. A nice good pop above it would confirm a forthcoming higher high, and more buyers could be joining in. So keep your eyes on that one. And in terms of the downside, well, of course, a break of this lower side of the rising channel would be needed. So until then, we're not really doing much. In terms of the downside for now, even if it travels a little bit lower, still anything up until this lower bound of the rising channel could be seen as a temporary correction before another leg of buying. So yep, guys, keep that in mind. DXY, so one of my favorite indices, and the dollar index here is moving quite interestingly. And the most important is that although on Friday we had a bit of a decline here, still, as you can see, it remains near this downside line taken from the high of the 23rd of March. So in other words, guys, if you want to look at some higher levels, yes, we could do, because we are now testing this downside line, but we need to wait for that confirmation break. As I mentioned to you guys previously, this push above the 93.90 zone would confirm, well, actually it wouldn't confirm the upside forthcoming higher high yet, but this could happen here somewhere on a push above the 94.65 the zone, but this could open the door towards higher levels. So keep your eyes on this highlighted area here, this 93.90 territory. Let's see if the bulls can actually finally lift this one higher and bring it above that level. If they cannot, then and instead we see the rate falling below this level right here, the low of the 12th of October near the 93 near the 93 zone. A nice good drop below the 93 territory could in a way clear the path towards some lower levels, slightly lower levels. No, we're not gonna drag this one way too much to the downside, but if it drops below that 93 zone, then yep, we'll consider a bit of a decline here. Now jumping into gold, and gold is trying to make its way higher here. In a way, it's still trading below this downside line taken from the high of the 18th of August. So this downside line continues to provide good resistance. If you want to aim for some higher levels, wait for a break of that, then that downside line, and then a push above the 1933 mark right here, which is the high of the 12th of October. A nice good push above it, yep, would confirm a forthcoming higher high, and more buyers could be joining in. Until then, it's a bit of a tricky game here, even with the downside, because although yes, we are still trading below this downside line, we are also trading above this upside support line taken from the low of the 28th of September. So in other words, this idea which I've mentioned last week, where to wait for a drop below the 1877 level at least, that's what I'm gonna wait for in order to aim for some downside. So a nice good drop below this territory could, yep, clear that way towards lower levels. Until then, guys, we are in a bit of a neutral spot here, so let's wait and see which of these lines will get broken first. WTI oil, so very interesting, very attractive, because we are very close to this key resistance level near the 41.46 zone, roughly around there. So a nice good pop above that area would confirm a forthcoming higher high, and yep, we could start looking at some higher levels. Now, in addition to that pop, what I would also like to see is well, a daily candle staying above it, because again, what I don't want to see here is a false breakout. So at the moment, yes, we are still trading below the 200-day EMA, which some might see as a negative. However, it's very close to that 200-day EMA. It's very close to that barrier. So a nice, beautiful pop here could, in a way, open the door towards higher levels. And in a way, also something for you guys to keep in mind, that if ignoring, for example, these little tails here, we might be seeing maybe something like a bullish flag here. Not an ideal one, of course, but nevertheless, yeah, it could be the case. However, don't just probably put that idea a bit on the side. Don't focus on it too much, because mainly focus on this 41.46 zone right here. So jumping into Bitcoin now, this one is working out so far nicely according to the plan that I talked about last week. Last week I've mentioned that yes, we could see a bit of a correction here lower, but if this 11,185 zone does provide good support, yep, we could see a bit of a rebound here and a push higher, but maybe back to this 11,740 territory. Now, as you can see, the crypto did rebound, but it's not really moving much to the upside. So for now, I'm just waiting here, because in order to get a little bit more excited with the upside, well, wait for that push above this 11,140 zone here in order to consider a further move higher. For now, like I said, we are keeping a close eye on this barrier, on this 11,740. We want to see a nice good break above it in order to aim for some higher levels, and then we could these are the two higher levels that I'm going to be aiming for. Initially, it's going to be the high of the, or should I say, the highest point of September near the 12,067 territory, or this 12,490 zone marked by the highest point of August. Now, in terms of the downside here, of course, if it drops below this 11,185 zone, then we will consider a bit of a larger correction to the downside, because don't forget that we still have this upside line taken from the low of the 8th of September, which is still kind of in play. Now, jumping into a few pairs, AUDJPY, and I haven't looked at this one for quite a while, but basically last time when I looked at this one, I was talking about this level here, the 75 mark, because a nice good drop below it may open the door towards lower areas, where initially I will target this this 200-day EMA. And look at this idea, basically work out nicely. So we had a test of this, well actually fell just a few pips shy from hitting that 200-day EMA, but we'll take that as a good result. So yep, the pair drifted nicely to the downside. So now let me just clear up the chart here a little bit, and we'll have a nice fresh start, fresh look on this one. So what's happening here, of course, is the fact that the pair, it continues to find good support near this 200-day EMA, and what I can do here is, for example, draw this little support line near the 73.97 zone marked by the lowest point of September. And a nice good drop below this area, of course, would strengthen the idea of a possible further decline. So basically what we need to see here first is a violation of this 200-day EMA, and then a drop below the 73.97 territory here, and because such a move here would confirm a forthcoming lower low. Now you can see that today the pair is correcting a little bit to the upside. That's fine. It found resistance near this 100-day EMA, shown as the green line. If it does push a bit higher here, still there is a chance for it to find resistance near the 21-day EMA, shown as the yellow line. But also don't forget that now we are trading below this downside line taken from the high of the 31st of August. So in other words, that even if it climbs much higher here, if it finds good resistance near this downside line, then yep, another round of selling here could be possible. We could also be seeing here a potential descending triangle forming, but again, it's a bit too early to kind of consider that idea, because, well, to be honest, we don't have a very clear triangle here yet. So, but just we'll keep that on the back of our heads. And of course, with the upside, we need to see a pop above this downside line, and then, yep, we could consider higher levels. USDCHF. So USDCHF is trying again to overcome that barrier, the 0.9163 territory. I talked about this one a lot last week, and we're keeping an eye on that level here. That's what I need to see in order to consider maybe some higher levels. In terms of, by the way, in terms of data today, economic calendar, not much is happening, to be honest. We do have a few speakers on the agenda, but from different central banks, but yeah, not much in terms of data. So yeah, in a way, keep your eyes on this, for example, on this pair, keep your eyes on the market sentiment and the whole situation surrounding the coronavirus. Now, and also keep your eyes on DXY, because if DXY gets a nice pop here, then yep, we could see USDCHF finally climbing above this 0.9163 territory, and then we could consider a bit of a larger correction to the upside, because don't forget that we're still trading below this downside line taken from the high of the 23rd of March. Now jumping into GBPNZD, I haven't looked at this one for quite a while as well, but it's quite an interesting one, because first of all, let me clear up, actually let me recycle some of these lines. Now, first of all, if we grab this downside line now, and we can draw this downside line from here, from this high, the high of the 16th of April, and capture this little top here, the highest point of August, and you can see that we are trading below this downside line, but we do have a bit of room here for the upside, for a bit of a larger correction, because from the short-term perspective, you can see that the pair is still forming these higher lows, and but it's struggling with this barrier right here. it's struggling with this 1.9645 zone, and we need to see a nice good pop above this. And well, to be honest, not only a pop, we would also like to see the daily candle remaining above this area, because as you can see, we keep getting these overshoots, but we don't get that daily candle kind of closing above it, or I wouldn't say closing, but staying above it. So that's why for now, yes, there is a possibility for this one to move higher, but I need that confirmation break above this 96.45 zone first. Ideally, I would like to see the daily candle remaining above that area, and then yes, we could consider a further move higher here. So but again, only in the short run, because again, this move higher could still be seen as a temporary correction. In terms of the downside, now previously I talked about this level, the 1.9385 zone, roughly around here. But to be honest, now let me just adjust this a little bit. I'm going to probably capture this little low, the low of the 14th of October, to which I'm going to keep an eye on here. The 1.9347, that's the level here, and in a way a nice good drop below this could open the door towards slightly lower areas. But at the moment, yes, I'm keeping an eye on these two levels here, and of course I do understand that for the downside it's a bit of a big area to miss out here, but to be honest, we'd rather be safe than sorry. So let's be very careful here, and let's be cautious, and let's keep an eye on these two levels. Mainly keep your eyes on this 96.45 zone, 1.9645 territory right here. Euro Aussie, now this one's very interesting right now, because it keeps on flirting with this key resistance area of its, and that's this area here. Let me just mark this one first. That area is roughly between the 1.6559 zone and the 1.6586 territory. So the last one here continues to provide very strong resistance. That's the high of the 12th of June here. Also was tested here on the 24th of September, and the same story happened on last week on Friday, when the pair tested that 1.6586 zone, and basically again you can see that it provided good resistance. So long story short, we need that pop, we need that confirmation break before we could examine the upside, further upside. So a nice good break, a nice good daily candle remaining above this area would confirm a forthcoming higher high, and of course this could open the door towards these higher levels that we saw here back in April. But at the moment it's still flirting with this hurdle. We cannot do much, although it's very tempting, but let's not repeat the same mistake here as we had in the end of September, where it seemed again that the pair is willing to break this barrier, but it drifted back down then. So yeah, in terms of the downside, well, it's pretty straightforward here. We need to see at least a drop below this 1.6340 territory right here, because as you can see, it kind of acted as a very nice area of support recently. And EURUSD. So EURUSD, I'm gonna repeat myself because the same idea remains in play. I'm looking at the 1.1696 territory right here on the downside, and the 1.1831 territory on the upside. So I need to see at least a breakthrough one of these levels before I could consider the next short-term directional move. At the moment we're closer to this hurdle, so in a way, and we're also below the 21-day EMA on the daily chart here. So in a way, kind of everything's leaning a little bit more towards the downside. But I cannot really talk about the downside yet because I cannot see that break here. So it keeps flirting with this area, but it doesn't really kind of stay below this. If the rate doesn't kind of want to remain below this area. So first I want to see that, and then we could consider lower areas. And initially what I'm going to target, if we see that break here, I'm going to target this 1.1612 zone or this 100-day EMA shown as the green line, and then we'll take it from there. But again, for now guys, yes, it is very tempting, but we don't have that confirmation break yet. Because what I don't want to see here is this suddenly reversing sharply to the upside and pushing higher, pushing above this 21-day EMA, and then yes, everybody will get kind of stopped out probably here. So that's why we need that. Like I said, we need to wait here, and once we get that confirmation break, and then yes, we could consider slightly lower areas here. So guys, I really hope you found it useful. Thank you very much for watching and listening. Thank you very much for joining in. I really appreciate your time. So if you want to catch my video later on, my trader's tea time is always 13:15 GMT. For now guys, I hope you have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. So yeah, see you later. Thank you very much, and bye-bye.